Ava Labs and Avalanche is really in the pole position.
Are representatives becoming more familiar with Avalanche and Ava Labs?
The biggest challenge has always been clarity and regulation.
100%, yeah.
There is a real urgency from the top down to actually create some legislation.
Well, ladies and gentlemen, thanks so much for tuning into The Scoop. I'm your host, Frank Chaparro, and we have joining us on the other side of the mic, John Wu, president of Ava Labs. I'm sure listeners are familiar with the project and a lot of the work you guys have been doing across the institutional landscape, gaming. We've waxed poetic about subnets before on this show, on this program.
For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer.
This is your first time joining us. So listeners who maybe live under the proverbial rock may be unfamiliar with you and your background and your role with the organization. Let's start there. Give us some background into yourself, sir, and let us know how business is going.
Well, Frank, first of all, it's great to be on this. Yes, it's the first time on The Scoop, but you and I have been in touch in various
Almost 8
forms.
years. Yeah.
Years and years and years. I don't want to date either one of us, so let's just move on from that. But anyways, good work on The Scoop. It's awesome. I've listened to some of these and they're excellent work.
Thank you.
My background, I know you know, but for the audience, I was in traditional finance. I was a technology investor of various well-known large funds, mostly on the public side, but also on the VC private side. Always looking for emerging technology, emerging companies to invest in. Innovation. I loved innovation. I got into the space first. I was a skeptic when Bitcoin first came out. And then about 2014, 15, I did some math and realized because of the fixed supply of Bitcoin that there's just a lot of incremental demand versus the incremental supply that was being mined, if you will, on a daily basis. And purely based on that, I became an investor in this space. But really, it was like 2017 after Ethereum launched somewhere 15 or 16, and programmability was happening on, through the smart contract. And then we saw the ICO boom and CryptoKitties that kind of shut down Ethereum for a while. That's when I got my aha moment. I was like, whoa, these ICOs, it's a better way possibly to do capital formation. And if you can put this into a STO, security token offering type of format, being compliant with regulation, you could also create more access for individuals, not just doing IPOs and capital formation for big companies. So I got excited about this space primarily for the utility or the potential for rewiring the financial services industry and creating more access and making it more efficient. So CEO of Digital Assets Group at Shares Post, we're trying to tokenize private securities. Back then in 18, 19, that was, frankly, it was Airbnb, Uber, and Lyft. But I think we're a little early for our time. The tech wasn't ready 100% yet. And frankly, the reg actually worked out. We did a change of membership agreement of ATS, but socialization of this concept of capital formation using a security token wasn't there, and tokenizing assets was just not too early. Dr. Eamon Gunseer from Cornell was working on the Avalanche blockchain to solve a lot of the security, scalability, and speed issues related to blockchain. I had known him for many years. That's where I did my undergrad. And 2019, well, he started earlier because he was still programming, developing it with his PhD students. But, I committed to joining in 19, officially starting in 2020. We were 10 guys in a WeWork like environment in Williamsburg, Brooklyn. That was like 5.5 years ago. And today, as you know, the Avalanche blockchain is well off on its mission to tokenize the world's assets. And Ava Labs, a company with the people behind it, is now 250 plus people. And we continue to chug along and do great innovative things and continue to update the Avalanche technology. So it's super exciting time for not just the space, but specifically for Ava Labs and Avalanche.
Mm. You're hearkening us back to the Haslian days of the ICO boom, at which point a lot of folks described the mechanism. Guess you can call it a mechanism or a new form of capital formation as the VC killer. That was kind of the the saying back in those heady days.
You may describe that as the halcyon days of 2017, like the OGs do, but like when you were trying to work like I was with SEC and FINRA and create a compliant solution to use that same technology for offerings and for capital formation, it was very difficult. It was the pioneers killing brain cells to get awareness and adoption in the regulatory landscape. And that is like, frankly, 7, 8 years ago now. It's finally, at a place where I think the space in terms of legislation and regulation is going to be at an inflection point and finally at a very good place.
Yeah, I think that when you look at the market today and the amount of uncertainty there is with the macro environment, it's easy to forget how far we've come in terms of not just, to your point, the size and scale of a lot of these projects and organizations relative to 5 years ago, but also the actual work that firms like Ava Labs are doing, and Avalanche. The the environment then, right? It's kind of was a lot of you know, not for a lack of hard work, but a lot of sputtering and just trying to make things work out of, spinning gold out of straw in many respects. And now you describe, 200 folks sort of uh, working to and actually building use cases, right? When you think about the work you guys are doing with JP Morgan's Onyx, and across the landscape, what sort of was obviously a lot of people describe November as being a regulatory unlock, but when do you think folks started taking this space more seriously?
Well, so when you're saying more seriously, you're talking about the larger institutions, enterprises, as well as what they call TradFi, traditional financial services industry. And I think that really started happening. I would say from a technology perspective, about 2 years ago, we had done a lot of Ava Labs had helped a lot of these firms do proof of concepts on a Avalanche blockchain. So they got very familiar with what was the potential of the technology itself. However, the last 2.5 years were very challenging from a call it transition from proof of concept to actual daily usage because they just didn't want to. If you're a large asset manager, you do not want to risk the core business on a pilot project, if you
Hmm.
will, or a proof of concept, even though you see the potential in the technology. So I would say there's two stages. 2.5 years ago, the technology was getting and the benefits of it for these institutions was starting to percolate in the various hallways of these large institutions, if you will. But it was, November where the activity picked up to a whole nother level. Um, and I think also, I think at the same time, the ETF of Bitcoin also contributed to more awareness. And that was probably about a year and a half ago. So that's how we talk about the last two and a half, the last year and a half, and then most recently as of November.
So break down the organization for us when you think about where you're allocating or committing resources. Um, is there one North Star, or are there sort of different types of focus areas that are important to the firm?
Right. So we're always a technology company first. And Ava Labs, the team created the Avalanche you know, platform and protocol that's out there. It's permissionless. So any application can develop on top of it. We have applications that span various industries from small individual entrepreneurs to small, medium sized business to even large enterprises, all creating their own L1s, is what we call their own layer one blockchains using an Avalanche protocol. Avalanche is really a network of networks in terms of blockchains. And that's actually a special thing. We'll get back to that in a second. The specific areas that we've always been focused on, primarily because one, we're in New York and there's always been an interest to service, Wall Street, if you will. And two, I think the natural technology benefits are now really becoming more and more evident in certain verticals like gaming and loyalty and royalty. So I would say there's a big emphasis on traditional TradFi, if you will, but there's also gaming as a vertical. Then there's also loyalty, royalty, very similar in terms of scope to the gaming area. And then, there's a traditional on-chain activity in DeFi and other things.
Walk us through what sort of the gaming environment looks like. I think a lot of listeners probably remember the actual Haslian days of when crypto gaming had its moment in 2021. Um, to what extent is it not dead and work
Oh, okay.
still
So
being
like
done?
that's what I would call crypto on-chain native gaming. A lot of those were play to earn,
Mhm.
and they were great for awareness and created a lot of benefits for crypto native. The gaming that we're seeing now on Avalanche are games from AAA publishers and large enterprises. A couple examples. Gunzilla, they have this game called Off the Grid. There's 15 million plus addresses launched in 6 months on this. There is about 2.5 to 3 million transactions per day. In the Epic Game Store, certain weekends, it was the number one game out there. And what they're doing is creating an in game asset marketplace on top of Avalanche in their own L1. And that's super exciting. They have their own token, it's listed. And that's an example of, call it AAA published type games using the blockchain and Avalanche to enhance capabilities of in game usage.
So, what's the penetration into the gaming market? And when you think about what you guys are enabling, is it simply serving as the undergirding platform for a marketplace for these in-game assets?
I think that's the first place. So what's the penetration? It's really just beginning still.
Mhm.
The gaming market is about a $300 billion market in the US. Roughly the research reports say about 50 of that is in-game asset trading. And the
Mm,
thought here is the benefit of a on-chain marketplace, kind of like and bundling games together so your call it assets in one game could someday be fungible with assets in a different game, and also a less frictional environment using stable coins to transact and trade and creating pools for one asset for another will hopefully increase that 50 billion to whatever billion and increase the $300 billion pie of gaming as a whole. That is the goal. And again, we are early, but we have some very good indicators of success. There's another use case. There's a company in Asia. It's a publicly traded company. The company's actually called Nexon. They have this game, Maple Story. It's been around for 15 plus years. There's over 200 million users. I think on any given day, there's 10 to 20 million daily active users. Don't quote me on the number, I forget
mm.
exactly. What they're doing is creating remember, this thing's been around for a long time. What they're going to do is create a version of that game on chain, on Avalanche blockchain, because they want user generated content. The composability of the code and the openness of a blockchain, especially the Avalanche L1, will allow them to let their users now create experiences inside the game and effectively code new um, results and new experiences inside a game. So they're doing it for slightly different reason, but that reason will be to extend the life of a 20-year-old game and continue to be fresh to their 200 million users.
What are the sort of specific business development tactics that are key to landing a client in that segment? How do you sell it? How do you sell sort of, bring your in-game marketplace onto Avalanche?
So just like I came from the world of finance and asset management, we had team members on the BD side of Ava Labs that came from the gaming world. People who
Mm,
used to work at EA, Electronic Arts, people who worked in, the industry of publishers as well as game development. And these are early, like all of what I've seen before the industry adopts, it's the experts inside the industry that take on the liking to blockchain or crypto. So some of these BD partners, meaning BD internal team members we have, they were from industry. So
mm.
they were able to see the potential benefits, and then they were our liaison to the actual companies. And then we would create first proof of concepts, and then ultimately live experiences like with Gonzilla. And these companies, they're big. Gonzilla raised $100 million to create their off the grid game. So it's not like they can just like try anything anytime. So they really wanted to make sure their users have great experiences. What they do is they usually no one goes from Web 2 straight to Web 3. They go from Web 2 to 2.1. 2.1 usually means putting things on a blockchain to get the efficiencies of this database versus the traditional way of doing things. 2.3 or 2.4, call it, would be letting users have their self custody. And 2.5 or 6 would be using a stable coin or their own local token or a Vox token in order to transact things. And then ultimately 3.0 is the full tokenization, letting users ultimately create in-game experience, the composability of the code, all of that. So usually these things are not overnight. They take time. They involve members of the Ava Labs team that have been in that industry. And then it's a slow first proof of concept. And then you go live with parts of the benefits of the blockchain and crypto tech stack, if you will.
What's cool though is like if you think about the direction, the end state of all of this, right? You have basically assets that are not just composable with other assets, but also, I mean, for the first time, you're financializing in-game assets, bringing transparency, liquidity, and honestly, a more robust market to an asset that didn't exist before. I think that's the most powerful thing about crypto in general is that it is effectively financializing assets that are either intangible or tangible, but also just don't have the sort of the trappings of a true marketplace. And ultimately, you can imagine a future where these in-game assets have some form of value that's on chain that can then be leveraged against other, or that can be leveraged to do a wide range of things, whether it's interacting with DeFi or even centralized finance.
You're absolutely right. You're almost talking about a state that would be considered 3.3 in our analog here, where new business models will be created, new use cases that maybe we haven't even thought of today, but because it's, a crowd-funded, composable architecture, the innovation will come from the crowd, and new things will be invented and used, and that innovation is going to take everything in this space to a whole nother level.
So walk us through then the penetration in the financial markets, right? Again, obviously, in this environment, everyone's really concerned about over the past month outflows from ETFs and sort of prices correcting, and there's a cloud of war that hangs over all markets right now, or most assets, but there's still this building going on in the background, and I want to walk through the JP Morgan relationship because this has been something that now I think has been in development for quite some time. I think it came out mid last year or something. So here's the actual point that's interesting. So often in each cycle, and you've seen this better than anybody, typically when we have these corrections and outside of Bitcoin, a lot of the long tail is down, 50% or more. A lot of the work within these large banks and institutions, if you think about 2017, 2021, they screech to a halt. People leave, they move on. Whatever proof of concepts that were in development are put on the shelf. But not to say that we're in a correction or in an environment that 100% mirrors 2017 or 2021, but even if I would contend, even if we got to that level of pain, this stuff wouldn't be shelved. Biddle's not going to be shelved.
No.
Onyx's tokenized portfolio, which is, I think, the best way to describe it,
Yep.
that they're working on with you, it's
Correct.
not going to be shelved. I mean, obviously, never say never, but I'm trying to just paint a picture of the difference.
Good. So let's talk. So basically, the difference between your first part and second part is let's highlight differences between the call it the asset class and the prices associated with the market caps associated with the assets versus the actual building and using the technology. So the assets
Before they were
obvious
super correlated, right? Like
before
I
they were correlated. Correct.
100%, yeah.
Great. Very astute to recognize that they're not as correlated for various reasons. There's a lot of it's just the macro issues, but also because frankly, there's three big trends happening. One is Bitcoin, which is in the last call it 7 months to 8 months. That is backed a lot by the ETF and creating new demand. It's actually holding up better than the S&P now in terms of
Yeah, I
volatility.
think
It's
so,
actually
yeah. I mean,
similar
on
now.
a risk adjusted basis for
Yeah.
sure.
Well, the second big trend is basically stable coins. We've now seen all the data where stable coins have settled more than Visa and MasterCard any given year combined. That's a big trend with regulation to cement that trend going forward. And the third trend is tokenization of assets. And in terms of stablecoin and tokenization of assets, a lot of underlying, call it operating momentum still continues.
Mm,
We'll get to JP Morgan in a second, but recently, Ava Labs just announced a partnership with the second largest Japanese bank, SMCB, Sumitomo Mitsubishi Commercial Bank. And this is a bank, the second largest in Japan. It's got close to $2 trillion of assets that they, deal with on the asset side of the balance sheet. It's not a small bank. What they're trying to create is on Avalanche stablecoin rails so they can make payments and tokenized assets flow better within the ecosystem of Sumitomo SMCB. Now, JP Morgan, to your question in terms of Project Guardian, now Sumitomo is one thing in Japan, but JP Morgan and their work with us in Project Guardian, as well as that includes also Apollo, a layer zero for bridging. And so basically their project
Axelar,
is
I think.
Onyx. Yep. There's a whole bunch and Monetary Authority Singapore's sandbox so that things can be done without tripping any regulatory concerns. I hope we have more of those in the US going forward. It's basically a giant, call it multi-chain ecosystem, including, I think, Figure from Mike Cagney, to allow tokenized assets to move freely in a, call it regulatory compliant way, where the people in the network are actually qualified, if you will, beforehand. So everyone is comfortable with the counterparty risk and there's no fraud or other things available, but they're using the benefits and creating less friction for servicing or administering some of these tokenized assets that hopefully will be moved around in this ecosystem and getting the benefits from a cost efficiency side and also from a productivity side. And related to your, I guess, 2A question, yeah, even though market prices have been coming down for the crypto space and Jamie Dimon hates crypto, JP Morgan continues to use the blockchain technology. I mean, they have this thing called Kinexys, part of Onyx, which is basically a way to, it's a way of thinking of stablecoins without the actual stablecoin. They are basically tokenizing and allowing, I think it's like 1 billion or 2 billions of assets being moved around between their partners and allowing them to move assets around within the, call it the ecosystem of JP Morgan. Similar to what we're doing, but with a stable coin for SMCB in Japan.
That makes sense. And what have been some of the, I mean, challenges or learnings in building this out? What can you share as it pertains to where we're at?
Yeah. I mean, obviously we're moving better and better direction. The biggest challenge has always been clarity and regulation.
Hmm.
I'll give you a specific example. We helped tokenize a KKR healthcare fund. That
Mm-hmm.
was live. That was not a proof of concept. That was
Mm-hmm.
live. Um, but that was actually before FTX. And
Mm-hmm.
after FTX, you had such backlash against the industry. When you're a $500 billion asset manager, you're not going to continue to um, play around in a sandbox. It's not even a sandbox, it's a live sandbox, if you will, that you're not sure how to define this tokenized asset, even though it's just a right of ownership in a blockchain as opposed to the traditional digital way in a digitalized way in a server or on paper. The thought originally was they would do more and more of those and maybe create a marketplace for their LPs of KKR funds. But we kind of just stopped it there at that point. But as soon as November happened last year, all of a sudden the demands of this stuff started picking up again. Instantly, Apollo, and we tokenized a private credit fund for Apollo. It's on our chain, on other chains with the help of Securitize, and that's a live thing. Uh, BlackRock continues to tokenize money market funds, and we continue to grow in the space.
How do these firms think about which chain they will tokenize a fund on, a credit fund or something similar? How much thought goes into that, right? Because I'm curious about the process. First, you have to get buy-in into the even concept of tokenizing something like a credit fund, and I'm sure there's a long list of attributes or ways in which doing that ameliorates the process, lowers costs, improves transparency and efficiency in operating and managing that fund, which we can go through. But you kind of have to buy into that, and then there's the process of, okay, which chain do I pick? Do I end up picking multiple chains, and what are the drawbacks and benefits of each? What is that sort of, what work goes into the latter? And then you can unpack the former as well.
Frankly, there's a lot of work that goes into it. Um, I think Christine Moy from Apollo said it the best. It's like taking, all those proof of concepts we did, what I talked about 2.5 years ago. That's what allowed them to see all of these asset management firms, all the financial services companies, the banks, to see that you can take, and her famous quote, I think, is 3,000 steps and reduce it down to one automated one and
Mm.
saving 20-25% in costs and possibly also um, creating more access for portfolio managers to easily move pieces around so they can get increased exposure to alternatives. Um, I think that was what all the proof of concepts enabled um, the call it large players to see the benefits of putting things on a blockchain. And especially with Avalanche, what they were super impressed with was the fact that you have these customizable layer ones that you can
Hmm.
create for themselves. So they are far more comfortable that they can create a call it it's technically it's a potential proof of stake network, but for now they were happy with the proof of authority where they allow people in the network that they were comfortable so that they weren't tripping any regulatory wires and they can be comfortable with counterparty risk and all of that. So I think from an Avalanche perspective, they really chose a chain because of the custom purpose built layer one that they can create to satisfy their regulatory requirements and demands, and at the same time, because it's EVM compatible and assets can move back and around from Avalanche to other places. That was actually Project Guardian, and that's why we had Layer Zero, and they're helping move things around. That's why they chose Avalanche.
Mm. So let's maybe take some time to explain what Project Guardian is, um, and how it kind of reflects the direction that we're moving into, um, or rather, how it reflects what the future of Wall Street looks like.
Right. Project Guardian, we have that, which is with JP Morgan, Apollo, Layer Zero, and Figure. And we also have another one called Spruce.
That's right. Yeah.
So Spruce, similar to Project Guardian, is basically call it institutional DeFi. It allows these players to see the potential for using tokenized assets as collateral in pools and allowing how showing how an AMM could work with a call it a tokenized asset that they are very familiar with, as opposed to something created in the crypto native world, and see what the benefits and cost savings as well as improvement experience possibly can be. So that's what those two projects are really about.
When you think about, and we talked about this at the beginning of the program, what um, the impediments were for STOs in their original sort of manifestation to take off. Was it the market? Was it the market didn't have the appetite, or were the operators and the companies in the crypto market that were doing this work, were they missing something? Were they maybe trying to tokenize the wrong things, as it were? Um, Clearly there was an imbalance, otherwise we would have been having this conversation.
Yeah, I mean, I hate to say the answer was both. I mean, one is the supply side and one is demand side. And on the demand side, most of the buyers of this stuff, even today, are still very crypto native. And they're,
100%. Yeah.
yeah. So, we need to continue to, what you said, one of the challenges. I think one of the challenges when rules are clear is we need to create more demand from people who are familiar with some of these assets. Um, a lot of the assets, first thing you'll do is tokenize existing assets, but changing the wrapper of ownership doesn't really, um, you know, it's an improvement, but it's not light years improvement. It's not the 100x improvement. So there needs to be education to the existing demand pool, if you will, why this is important. And this is why yielding stable coins, tokenized money market funds, and all of this is actually starting to be part of the education process for existing, call it crypto native demand side.
So what do the next 6 months look like if we were to have you pull out your crystal ball? What are you focusing on? And from a managing the company perspective, and then also just externally, what are you excited about?
Well, from a company perspective, the company just went through two big tech overhauls. One was an upgrade to the L1 architecture, allowing everyone to have their own purpose-built blockchain, the network of networks of Avalanche. And recently, we just announced what we called Octane, which is basically an improvement to the main chain in terms of lowering fees and increasing speed. So there's going to be a lot of activity that we're super excited about, supporting with business development. That's one thing on the company side. From a greater on a space or industry perspective, I think I was in DC a couple of weeks ago and
Sure.
met with 15 different, call it House of Representatives and senators. There is a real urgency from the top down to actually create some legislation. We are hoping we'll have stablecoin and or market structure um, in a very close to final form, if not a final form, by fall, if you will. That's what my sense was when walking around the halls of, Capitol Hill and so forth in DC, if you will. And once that happens, I think Ava Labs and Avalanche is really in the pole position because we're the ones where the traditional finance firms and even the enterprises doing gaming are very familiar with because they already tested the tech out. So it's just a matter of saying, okay, this is completely regulatory compliant. And I'm looking forward to that, hopefully back half of this year, where you have an explosion, this inflection point where activity just continues to pick up. We have like close to 200 test nets of L1s.
Hmm.
I think roughly 2025 are live. Um, you're going to see a lot, and besides that backlog of test nets growing, you're going to see a lot of those existing, call it 175, 150, inflect into live projects.
Do are representatives becoming more familiar with Avalanche and Ava
They
Labs?
are very well, yes, but they are very sophisticated. I mean, I listened to it was one of the people I met with, and I was super impressed. And you had him on was House Majority Whip Tom Emmer. I
Sure.
mean, the knowledge, the insight he had, understanding that this is not just about crypto, but also about helping create a better financial services industry and tech stack that and creating innovation that is on top of mind, and they're very focused on this. So and their knowledge is far more than I think people give credit.
I think that's fair. Well, sir, thanks so much for taking the time. I feel like we need to do these as regular updates, get a sense of what's going on over at Ava Labs.
Happy to, and we should do it far more often.
Definitely. Thanks for taking the time.
Thank you.
Mm-hmm.